All right, let's get right into it. Congress just pushed through one of the most expensive laws in American history. It's called the One Big Beautiful Bill Act, or OBBA for short. So today, we're going to unpack what this massive $3.2 trillion tax law actually means for your wallet and for the entire U.S. economy.
To really get why this law is such a big deal, you have to start with this one simple question. Because just a little while ago, this wasn't some hypothetical. For millions and millions of Americans, it was about to become a reality.
The country was barreling towards what everyone was calling a tax cliff. See, all those popular tax cuts from the 2017 law, the TCJA, they were all set to just disappear at the end of 2025. And that meant, boom, an automatic tax hike for pretty much everybody. The 12% bracket would have jumped to 15%, the 22% bracket to 25%, and on and on.
And look, this wasn't some small problem affecting just a few people. The Congressional Budget Office ran the numbers, and they projected that a staggering 62% of all tax filers would see their taxes go up. That's the huge fiscal problem that lawmakers were trying to solve.
So with this giant tax hike looming over the majority of Americans, what did Congress do? Well, they came up with an answer that was just as massive as the problem itself.
And here it is. In the middle of 2025, Congress passed and the president signed the One Big Beautiful Bill Act. Just like that, those scheduled tax hikes were stopped dead in their tracks. The tax cliff was avoided.
But, and this is a huge but, that relief came with an absolutely jaw-dropping price tag. The CBO estimates this law is going to add a stunning $3.25 trillion to the national debt over the next 10 years. And that right there, that's the core conflict of this whole bill. Huge tax relief paid for with a whole lot of debt. So what is OBBA, really? Well, at its core, it's a law that basically took those temporary 2017 tax cuts and said, yep, these are permanent now. Plus, they threw in a whole bunch of new tax breaks for good measure. All right, let's pop the hood and get into the nitty-gritty. What's actually in this thing? What exactly did this law change for you, for me, and for businesses across the country? Okay, the headline news. The biggest piece of this puzzle is super simple. The individual income tax rates we've all gotten used to since 2017 are now permanent. The rates from 10% all the way up to 37%, they're here to stay. So that big jump we were all worried about, gone. Now we get to what might be the most debated, most controversial part of this whole bill, the SALT deduction cap. The bill doesn't get rid of the cap entirely, but it does quadruple it, jumping from $10,000 all the way up to $40,000. But, and you're going to see this as a theme, it's temporary. And this is where things get a little complicated, but it's super important to understand. First, that new $40,000 cap, it's only for households making under $500,000 a year. Make more than that, and it starts to phase down. And here's the kicker. This relief is temporary. In 2030, the cap slams right back down to 10 grand, which basically sets up another huge political fight just a few years from now.
But wait, there's more. The bill is just packed with other changes. For individuals, there's a small permanent boost to the child tax credit and a few new temporary deductions for things like tips and overtime pay. We're also seeing new tax-deferred savings accounts for kids called Trump accounts. But for businesses, the changes are massive. Two huge provisions are now permanent. First, full expensing, which lets a business write off the entire cost of a new investment immediately. And second, the Section 199A deduction. That's a major tax break for small businesses.
Okay, so we've got trillions of dollars in tax cuts on the books. The big question is, what does all this actually do for the broader U.S. economy?
So let's really look at that price tag. The CBO crunched the numbers, and you can see it right here. The law dishes out nearly $4.5 trillion in tax cuts over 10 years. To help pay for that, there's about $1.2 trillion in spending reductions from programs like Medicaid and SNAP. You do the math, and that's a net cost of over $3.2 trillion.
Now, here's the part that might really surprise you. For all that money, for a multi-trillion-dollar law, the projected impact on economic growth is, well, it's tiny. The Joint Committee on Taxation estimates it will only boost GDP growth by 3 basis points. Why? Well, a big reason is that the law mostly just prevents a tax hike. It doesn't create a huge new stimulus by cutting taxes from where they already are.
And the way this bill is built is pretty clever, politically speaking. You get the good news, all that tax relief, right away, giving the economy a little short-term juice. The spending cuts, the fiscal pain, that stuff is phased in over later years, pushing the tough decisions down the road.
So, where do we go from here?
This law might have solved one big headache, but it definitely created a whole new calendar of deadlines and potential problems that we all need to watch.
This timeline really lays it all out. While those main income tax rates are here to stay, a lot of the other popular goodies in this bill have an expiration date. In 2028, a bunch of those new deductions just vanish. Then at the end of 2029, the bigger SALT deduction disappears. Every single one of these dates is a new potential cliff that Congress is going to have to deal with.
And that brings us to the ultimate question, doesn't it? The One Big Beautiful Bill Act certainly did its job. It stopped a major tax hike from hitting most Americans. But by making some cuts permanent and others temporary, all while adding trillions to the debt, did it just trade one big, scary tax cliff for a whole series of smaller, more complicated fiscal cliffs in the future?
This is not financial advice.